Hey everyone, welcome back to the channel in 2021. In this video, I'm going to show you my stock portfolio and how it's performed so far. And then we'll talk about the stocks that I'm watching this year in 2021. So before we start, I'll be honest and just say I'm not really sure why anyone wants to see what I hold, but when I watched a few other channels' portfolios, it was really interesting to see what they hold. And I thought if I was interested enough to watch theirs, then my audience might be interested enough to see what I hold as well. So let's just roll the intro and get started. Let's start with the platforms that I use. I actually use 3 brokerage platforms in CommSec, Self-Wealth, and Stake. Now, every platform has its own pros and cons, and I chose those 3 platforms because they can negate each other's cons so that I can then take advantage of the pros. So number 1, I use CommSec for my retirement fund, which in Australia is called a self-managed super fund, or SMSF for short. Actually, this is a family super fund which has all the investments that we regularly contribute to, but is locked away and something we can't really touch until we retire. This type of account is regulated quite heavily by the government and is audited every year, so it's really important that we try and make sure that the broker we use is a really reputable bank broker. So by using CommSec, it also means that I get access to the best platform for share and stock analysis, which I use as information in all my videos. And that brings me to the second brokerage platform in Self-Wealth that I use to buy all my personal shares, and it's got the best brokerage fees available as a CHESS registered broker. This is important to me because it means I have full ownership of the shares under my own individual HIN number rather than being at the mercy of the brokers. Now, I know brokers like Superhero and IG are even cheaper, but I'd rather pay a little bit more and be CHESS registered in my shares. Plus, having 2 brokers means that I can also cross-check company financial numbers and then make the trade on the cheaper broker, which of course is Self-Wealth. And the last broker that I use is Stake, which I use to buy stocks on the New York Stock Exchange and the Nasdaq. Since I don't live in the US, I don't really recognize a lot of the companies that are listed there, so I try and stick to the famous ones only. Stake is a really good brokerage platform for Australians looking to trade on the US market because it doesn't charge any brokerage fees. And the only money you really pay to them is when you change your Aussie dollar over to the US dollar, and even that fee is pretty minimal at that. And on top of that, they got a really good referral program as well for you to invite your family and friends, and both of you will get a free stock on this Wheel of Fortune thing, which I think isn't really up to random chance. I think it's predetermined, but anyway, free stock. But if you're the first among your friends to try out Stake though, feel free to use my referral link down below in the description to get a free stock. And then you can invite your own friends to get even more free stocks. Now, let's get into my actual holdings. I'm going to use a service called ShareSite to collect all my shares across the brokers and graph their performance. This is a really good free service that you can also use, so if you want to try it out, there's a link down below as well. I'm only going to reveal my personal shares and not my super account because that doesn't belong to just me and it wouldn't be fair to reveal all of that. So starting off with ASX shares, I have Australian Finance Group, which are basically the biggest mortgage brokers in Australia after the merger with Collective goes through. Now, with the low interest rate nowadays, I think there's going to be plenty of refinancing, and that's where brokers will be making some coin, even if the banks themselves are going to be hurting. I've got about a 30% profit on the current holding, but I've traded this a few times when it was volatile, so the return is actually around 80% so far, and it's easily my best performer. Next up is my biggest position in EML, which I've made a few mentions in my videos. I've never sold any shares in this stock, and at this stage, I just plan to continue contributing more money into it every time it dips under $4. I think it's a really solid stock that specializes in digital payments, and I truly believe that they will only go from strength to strength. Next up is Macquarie Bank. I bought a very small package of this pretty much at the height of the pandemic when everyone was panicking, and I really wish I bought like 10 times more, but anyway. I think they're a more diversified bank than the Big Four, so I've been rewarded with around a 40% return. The next share is Aurora Limited. I bought this stock as an experiment kind of to see if dividend hunting is a viable strategy. They distributed a massive 12% dividend in one go about 6 months or so ago, and I bought in to get a piece of that. And I'm happy to report that even though the dividend was good, dividend hunting wasn't great, and the share price generally takes quite a bit of a tumble after the X day. So now I'm kind of just stuck with this share until it generates some sort of profit before I will sell. The next 2 stocks are in the travel sector, Qantas and Sydney Airport, and I bought these for the medium term for when travel starts back up again. Now I know this might take a couple of years, but I'm in no rush to sell, so when the vaccine arrives and we reach that 80% vaccination rates here in Australia, I'm pretty confident that we'll see some kind of recovery in both these stocks. Wesfarmers is another really solid company stock that I bought at the height of the pandemic. And again, I was too tentative when buying it. So that will be another mistake that I made, and I'm constantly reminded of it by the 50% return on a very small holding. So my profit on it is pretty tiny compared to what the return percentage actually is. And the final stock that I hold is one that I bought very recently, and that's Xero. Sure, I bought it a little bit higher than I would have liked to, but it was part of my regular contribution, and I'd been watching this stock for a while and decided just not to time the market this time and just to go for it. I mean, I've used Xero before and I've always thought their product was really streamlined and pretty essential nowadays for small to medium businesses. Over to my stake portfolio, and really the one significant holding I have is in Tesla, which I bought when I first started looking at the US market, and I plan to hold it over a very long term. I do think that electric cars are going to be really common in the next decade or so, and Tesla will be outshining all the Toyotas and the Volkswagens of the world. The other holding is just in Cisco, which I just wanted to spend the last of my cash in the stake account, and now it's generating some ridiculously small dividends here, and I'm even getting taxed on it still. And some shares are in GoPro, which are from Referrals on the stake platform. So if you're looking to sign up to stake as well, use the link down below to get started so we both get a free stock when you put some funds in. You'll spin this Wheel of Fortune thingy, which gets you a stock in either GoPro, Nike or Dropbox. But with my luck, I've pretty much only been getting GoPro, which is worth the least of the three, but hey, you might have better luck than me. So that's my entire personal portfolio, which to date is worth almost around $50,000 or so. And I've had about a 25% capital gain with barely any dividends. I'm not sure what everyone else has gone through, but I think this kind of gain is pretty average considering what the market went through this year. Or last year rather. But we definitely shouldn't get used to these really high gains. It's not natural. So my goal is to eventually reach a $1 million portfolio, which hopefully will generate around about $50,000 in dividends per year. So that means I'm going to have to be contributing around $50,000 a year for at least the next decade or so, which when you factor in reinvesting dividends at a rate of about 10% per year, I think that will get me pretty close to $1 million. In terms of stocks, I'm definitely going to be keeping an eye out for A2M, as well as some energy stocks like AGL and Origin, which are both at very low points because of downgraded earnings, but are still paying really good dividends as well. I'm planning to try and transition away from stocks that have benefited from the pandemic and try and get more into dividend stocks like REITs, such as GPT Group or Cromwell Property Group. Both are really strong dividend stocks, and they don't really get much attention these days. Anyway, this video is getting pretty long, so I'll just finish up here. I'll definitely try and keep you all updated on the stocks that I'm researching and buying, so make sure you click the like button, subscribe for more videos, and as always, I'll see you in the next video.